We've all heard the pitch: invest early, wait, and watch your wealth grow. You're promised that if you just stay patient, compound interest will transform your small investments into big fortunes. The numbers are tantalizing. $100 invested every month at an impressive return could lead to millions down the line. It's the dream of effortless wealth. Who doesn't want that? But there's something you need to know. This path is not as simple as it seems. And for most of us, waiting for decades isn't a plan. It's a gamble. You're not just up against time. You're up against forces that will drain your wealth before it has a chance to grow. Let's break down why this fairy tale doesn't work and what you should do instead. The fallacy of time. Here's the first truth. Time is not your ally. You've probably seen the charts. A small investment made in your teens grows exponentially over the decades, eventually leading to huge sums. But here's the catch. How many of us start investing in our teens? How many of us even have the luxury of starting in our 20s? By the time most people are able to save, decades of potential growth have already slipped away. Let's be real. The average person isn't saving in their teens. They're in school, building their careers, and juggling debt. The common advice, to start early, might sound like wisdom. But in practice, it's not feasible for many people. And what happens if you're unlucky enough to miss that perfect timing window? You're stuck trying to make up for lost time. And that's where compound growth starts to betray you. Because by the time you're ready to invest, you're already playing catch-up. Reality check. The magic of safe returns. Second truth. Reality doesn't align with theoretical growth. It's tempting to believe that the magic numbers you see on financial charts are achievable. Those safe returns of 8% or 10% sound reassuring, but they're based on one big thing: hindsight. They're looking backward at stock market trends, historical returns, and cherry-picked success stories. Here's the truth. For every success, there's a failure. For every Apple, there's an Enron. Every high-flying investment comes with risk. Real, tangible risk. The markets don't care about your financial goals or your hopes for early retirement. They're indifferent, and they'll chew you up if you're not careful. The worst part? Many financial advisors prey on these unrealistic expectations. They sell you the dream of risk-free returns when, in reality, these returns often carry more risk than they're letting on. And when things go south, like they do in every market correction, you're left holding the bag while they walk away with your money. The inflation factor, eating away at your wealth. The third truth is this: inflation is a silent destroyer. Let's face it, the money you invest today will be worth less tomorrow. And the longer you wait, the more inflation erodes its value. The same $100 you put in a savings account or the stock market today might not even buy a decent dinner in 50 years. Inflation might be easy to overlook when the markets are soaring, but when the costs of living, food, healthcare, housing, are rising at rates higher than your investment returns, you're losing. Your returns are nothing if they don't outpace inflation. That's the cruel twist. Compound interest might seem powerful, but inflation can wipe out all your gains. The path forward: taking control of your wealth. So if time, reality, and inflation all work against compound interest, what's the alternative? It's simple. Take control and seek real, actionable ways to build wealth now. Start by looking at opportunities that don't rely on waiting for decades. Invest in skills, businesses, or side hustles that give you the power to create value and generate income in the short term. This is where real wealth comes from, not waiting around for an ideal time that may never come. Use your time, resources, and energy to actively build wealth instead of passively relying on an uncertain future. Be strategic. Take risks, but do it in areas where you have control. Understand the realities of inflation, market cycles, and personal growth. Wealth is not about letting time and numbers do the work. It's about actively creating the future you want today. Conclusion. Waiting around for compound interest to work its magic is like waiting for a ship that never arrives. It's a passive dream built on a foundation of assumptions that don't apply to the real world. The key to wealth isn't simply saving and waiting. It's taking action, being strategic, and staying ahead of the curve. In the end, you don't have forever to make your move. You need a plan that works today, not a theory that works in decades. Build your wealth now, or you might just find that time has run out before you've even gotten started.